GETCRACK. Wake up, motherfucker.
Celebrating the 15th anniversary of their initiative, started back in 2010, Small Business Saturday, expected to bring in $200 billion this year. So I started by asking him about the state of small business in America and the challenges they're facing. Have a listen.
We've had a situation where we've had inflation, we have high interest rates. A lot of them, and you heard this today, a lot of them still haven't recovered from COVID. And so I think small businesses are on the upswing. And I think that's why I think it's really important to support your local small businesses. And, we just did a survey of small businesses, and, 95% of them are feeling more positive, and they believe that the sales year over year will be more positive. But if you think about the places we went to today, went to the local, butcher, we went to a couple of restaurants, they really count on this period between Thanksgiving and New Year's to sort of make their year. You heard more than one of them say, this puts me in the black for the year. So I think they have struggled. They've talked about, high labor costs and so forth, but I think they are coming back, but it's been a much slower climb back than I think any of us would have hoped for.
I mean, it's been a big priority for you and your business. Obviously, you've done well with the small business loans, but what about spending, which has seen a recent deceleration? What does it take to get that back?
Yeah, so there's two things with small businesses. There's the merchant side of small businesses where consumers come in and spend, and that's going pretty well. And then there's the money that the small businesses spend themselves. And so what we've seen is, we talk a lot about same-store sales. We talk about organic sales. And, pre-COVID, small businesses organically grew about 3% a year. And then a year or two after COVID, it was a 20% growth and 23% growth as people were looking to worry about supply chain issues. They were worried about could they have inventory and so forth. But what then happened was, as interest rates got higher, as the cost of goods went up, they weren't keeping as much inventory. And so you're seeing now small businesses spending a little bit below, on a same-store sales basis, a little bit of a deceleration. We're starting to see that taper off. Its organic growth is not a positive at this point, but we think over the next 12 to 18 months, we'll start to climb our way back.
Why? What is the factor there?
I think it's taken, the grow over is long. So what you have is a situation where you had small businesses putting large transactions, which were never intended for credit cards, on those credit cards during COVID, because it was the only way you could pay. So some of the advertising spend and things like that are falling off. And I think they're getting more comfortable with their inventory levels as they start to think about, what their sales are going to be for the next 12 to 18 months. So that's what I think. I think we're just going to get back to a reset, and maybe it won't be back to 3% organic growth, but it will not be negative.
What about card members overall, American consumers? How do you describe how the health is right now?
Yeah, it's been stable, right? It's been stable for the last, 4 quarters for us. When we look at our overall card spending on a global basis, it's about 6%. Our U.S. consumer card spending is about 6%. If it was strong, that U.S. consumer card spending would probably be 8 or 9%. But 6% is not a bad level to have in an economy that I wouldn't say is exploding at this point, right? And so, we're optimistic about the future. And the nice part about our card members is that they're high spending, high credit worthy, high income, and they do have a lot of discretionary spending. And so they're continuing that, but they're a little more cautious than they've been, the same cautiousness that they've been sort of for the last 4 quarters.
I was just going to ask next how you characterize
reading into it
right now. You said it's not necessarily gangbusters, but not bad.
No, it's not bad. And I think, we talked about this, when we did this sort of interview 3 years ago, everybody was waiting for the thing to completely crash, right? And, we've been all planning for the recession. It never happened. I just don't think you had that real boon. You had that boon come in from a travel perspective. You had that revenge travel come in right after the COVID, lockdown ended. But I would say it's a stable economy right now, not one that is overheated.
Tim. This was kind of a shock on Monday evening when we saw President-elect Trump first post on Truth Social about the tariff threat for Mexico as well as Canada and China. And we saw Prime Minister Trudeau immediately on the phone with the president-elect. We didn't see President of Mexico, Claudia Sheinbaum, connecting with him until the afternoon on Wednesday, and then we got this readout on Truth Social from the president-elect saying, we had a wonderful conversation. Mexico has agreed to close its border. Essentially, everything's great, and this completely different tone from what we had seen just 48 hours earlier. We later saw a readout from the Mexican president saying Mexico does not agree with closed borders. We are trying to address the migration issue through a humanitarian and a helping hand to the people who are coming, and to treating it in a very humane way, and through collaboration with the U.S., through finding jobs and opportunities for these people. And so, very different kind of description from both of these leaders as to what was agreed and what was understood by each side from the phone call that they had on Wednesday.
Eric, you spent a lot of time in Mexico. You've also spent a lot of time on the trade beat, so you understand how these things work. Tell us a little bit about her approach, because she seems to be mirroring Trump just a little bit in more recent days, bringing people on stage with her, for example, and saying, we have a plan too. And, the US will be hurt just as badly, if not worse, from the imposition of higher tariffs.
Absolutely, Vani. What we saw on Tuesday in terms of the initial reaction from the Mexican president was a message that I've really heard described by some Mexican officials as aimed at a domestic audience. This message was about defending Mexico's national dignity and pointing out that Mexico is a sovereign country, that Mexico has leverage. It's not just the U.S. that has leverage in this discussion, and that, as the president of Mexico said, if the U.S. applies a tariff, it will be followed by another tariff and another by each side, and you'll develop this trade war, which ultimately is not to the benefit of either side in terms of economic self-interest. Now, obviously, that was what the Mexican president said. That's not a message that necessarily historically has always been one that has registered with President Trump in the first term, in terms of trying to just inform and highlight statistics and the way that, what the actual numbers are saying about the problem. Because if we're looking at the numbers, the number of people arriving to the southwest U.S. border is currently, in recent months, has been at the lowest that it's been throughout the Biden administration. It's about 100,000 people per month, which is down about 66% from December of 2023, before Mexico made a greater effort. So Mexico highlighting in part they've already been making an effort. It's been lowering the numbers and trying in part to use such an information campaign and the persuasion campaign to point out to President-elect Trump the damage that the self-inflicted wound that it would be for American consumers, people who buy things like pickup trucks. The Mexican economy minister talking about the price of pickup trucks rising $3,000 per vehicle on average if these tariffs were imposed.
So break that down a little bit for us, because when that was announced earlier this week, or I think the president-elect posted on Truth Social about it, we did see shares of Ford take quite a hit. Shares of General Motors moved lower as well. Given your experience in Mexico, also your experience in Washington, D.C., what does our investing audience need to understand about the path of consumer goods that are at certain points built in Mexico and then shipped to the United States? Like what does it look like as a trade partner?
Well, Tim, when I was covering the USMCA negotiations or the NAFTA renegotiation in Mexico in 2017 and 2018, part of the challenge is just the kind of mental gymnastics and math needed to figure out even how do these tariffs work when you have something like a chassis for a vehicle that, passes across borders several times in the manufacturing of that vehicle. And so you've got factories in South Carolina, in Alabama, in the U.S. South, or even in Michigan, where parts and where a vehicle during assembly crosses the border several times. And so there was a question back then about, well, does the tariff get applied each time that that the vehicle is passing through? How do you even calculate this? And so fortunately, at the time, cooler heads prevailed, and the U.S. did not withdraw from NAFTA as the president had threatened during the campaign in 2015, 2016. He sat down with the governments of Mexico and Canada and essentially renegotiated NAFTA, even though he's touted USMCA as a new deal. everybody involved with it recognizes that it leans heavily on and contains a lot of the concepts and the agreements from NAFTA from the early 1990s, although updated to today's reality. So we've got a renegotiation of the USMCA that by law, as part of the USMCA, actually revision is supposed to happen by mid-2026. Each country's been debating exactly what that looks like, how deeply do they renegotiate, but President Trump making clear here, even 2 months before he gets into office, that he wants to see a lot of changes to the agreement that his own administration negotiated just 4 or 5 years ago.
Eric, I'm just curious because, Monterey is really not very far over the border, and that's where a lot of factories are, including Tesla factories as well. How much of a chill is running through that city right now?
Well, Vani, certainly for the entirety of the Mexican economy, as Tim mentioned, the number of leaders who were flanking President Sheinbaum on the stage at the morning press conference at the National Palace on Wednesday morning. And I've been to Monterrey. I've spent a lot of time there, and I can tell you there are people whose livelihoods have been improved by the economic opportunities that have been made available to people in the north of Mexico in recent decades. Monterrey has the Tec de Monterrey, which is considered kind of the MIT of Mexico, that is graduating hundreds or thousands of engineers every year, many of whom go to work on some of these assembly lines. So the biggest thing that I think people there want people in the U.S. to understand is that it's not just low wages, it's not just a wage differential, even if that's part of it, but there's also a highly trained and highly educated workforce, particularly in the north of Mexico, that has been integrated into this regional economy, trading more than $1 trillion a year between all of the three countries in North America.
Hey, what's up, guys? It's Black Friday, November 29th, 2024. Market was a shortened day, not too much going on, but I'll update you on what I have so far. But I also wanted to talk about plans for the future here because we're going to December. Also, want to talk about that. So, before I start, we got Black Friday, and if you wanted to get the trading view, if you really wanted to, yeah, you got about 5 more hours to get the deal. So let me show you what we got here. Let's see, choose a plan right here, trading view right here, 6 hours. Yep, 6 hours. Yeah, you can get the premium, the plus, essential. Premium is like negative 70%. That's about $217, plus $216. So yeah, either one would be probably worth it if you got those two plans. If you really needed them. If you got Thinkorswim, you don't need that. You know what I mean? So yeah, just letting you know. And the link's in the description, so you can go there, tradingview.com/black-friday. Yeah, I'll put it in the chat for you if you need that. And what I'm planning to do, let's see, Black Friday. Man, I wonder if like whole thing's getting slower and slower. I definitely need to get new computers too for the streaming stuff. Okay, so here, Black Friday right there. And what I'm also gonna try to do is get this, because they finally got a Black Friday deal on Symbolink, the DeMark indicators. And if you listen to yesterday's 24-hour stream, I was on there, and yeah, Portia was asking about this too, about what I meant by DeMark. So what I'm going to see is I'm going to buy this, okay? And, this thing, let's see what happens. Let me show you the market indicators. You're like, what you get, it'll be interesting. And then I'll incorporate it into my analyses for you guys. And I'll just put your little trades and little examples of where you buy, where you sell, and that's about it. So in addition to what I tell you already right now, but more precise, right? And I'll probably put up a blog somewhere. I think what's it, a Substack or some crap like that. Yes, let's see. Oh yeah, right. She was calling me. I'm on stream right now. Yeah. But anyway, yeah, I'll see what I'm gonna do. I'll do the Substack. Let me see if I do Substack or something like that. Blah, blah, blah. Yeah, Substack. Something like that. Did I do Substack? Yeah, I'll figure it out. Okay, it's either Substack or somewhere else. I don't think I'll do Medium or something. I don't know. Medium or Substack. Yeah, I'll figure that out. And then we'll see how that goes. So then we get the trades. Okay. But yeah, if you want, again, that's up to you guys. I mean, I don't know. If you really need it. But yeah, you could use Thinkorswim, If you got that, you don't need this. But just letting you know. And then Symbolic, that's just for me. It's not really worth it for you guys to do this. This is just for my my fun here. I'm just going to try to compare between the open source, the mark indicators, and this one, because I don't think they're the same. And I'll show you why, later. But anyhow, yeah, let's go back. Okay, so yeah, we did some trades from Wednesday, right, with the Bitcoin. Okay, so if you did some Mara, some CLSK, you would have got some nice gains from yesterday, before Thanksgiving into this morning. That would have been a good one. So let's say CLSK. Let's see how much we got here. Quick trade. Yeah, from Wednesday to here, that's 13%. I think Mara was about the same. Now, everything's close to breakout. I'm not going to guarantee that 18%. All right, that's good. Something like that. Wolf and Hut I kept because it didn't really fade. They have a stronger chart, so I'll just keep those two for now. Yeah, also trade the MSTU or MSTX, either one you guys did. Those two, yeah, if you did it, well, I told you guys to jump in, go long Tuesday, so you could have sold some on Wednesday before Thanksgiving, and another bunch on Friday, 2 sets, and then you can just keep the rest, if you want to hold on to some. Up to you guys. Same thing with Mara and CLSK. Yeah, I mean, you could just hold on to them, I guess. Mara's definitely has a better chance breaking out now, but it could be altcoin season. If it's altcoin season and Bitcoin just goes sideways from now, then yeah, that's not gonna work. So there's no guarantees here. Now let's see. NVTS crap. Yeah, it went up again today, so it recovered a bit. If you missed out on getting it below 2, yeah, just wait. I wouldn't be in a rush here. AOI is another thing that's really about to hit like its resistance. It might break out, but yeah, this thing is, it's a trash company. It's just really for trading. Yeah, if you guys didn't get in before earnings and now it's just like really flying now, yeah, it's really hard for me to say I'll get it. So hold on to your guns, okay? Powder, whatever. I'll try to make it more clear what you would do if there's any good entries. But what I did like today was the moves on nuclear. So LEU, NNE, LTBR, those three, yeah, they look ripe to continue up. And yeah, I'll have to put entries on them too. So everything will be listed in more clear format in the blog if I make a Substack, and then you guys can see what you can do with that. Okay, what else is good? Hymns, my favorite. Ooh, yeah, it's trying. It's really trying here. We can go here on this chart. I'll show you. Yeah, it's broken out. It's really trying to get those new highs. It's just really flying with no respect to anything, because now we're just trying to do new highs. And, even with XBI not doing anything today, I like this. This stock may be going to be my next favorite one, in the coming days. So, you know what my favorites are. PLTR, Palantir. It's made a new high today. You know what? New month is coming. Be careful. If next week on Monday things go south, Axon, the other one. Axon. Yeah, really good. I mean, yes, only two I've been recommending really hard for long term, but it's tough. It's tough. I don't want to do a tax event. I guess, I get options, I guess, and do some insurance here, or you could say, but if the markets really wants to turn down for December in some instances, we might be in trouble. Right now, I don't see any indication of that, but it could. It could, because we're entering new month. Things might shift. People might start taking profits early because they'll just be like, whatever, rather keep profits than worry about the tax man. That could easily happen. GameStop, yeah, it might be an end of month effect. You see that in GameStop. Maybe this is nothing, but dude, if it just doesn't want to go back to 30 next month, I might change my mind on that and say forget it, because I want this to squeeze before the 10th. The earnings is on the 10th. Okay, so you have another week, so better change his mind. Let's see what else. Oh, Jinko Solar, yeah, JKS. This one, Chinese solar company, piece of garbage, but it might be coiling up to try to pump again on China, because China took a beating. Perfect. So this is FXI. It hit this level at 29.42. So FXI is the ETF of the largest Chinese companies. If it tries to recover here for the next month, then yeah, I'll be doing JKS. And the other one, my favorite junk Chinese stock that's AI and defies gravity, does not care. It's just teasing that 7.32 level. Once it hits that, it's over, game over, because we can just start flying like crazy to the moon, because it's been having a high volume since September. And if it's just easy to pump. They'll just easily pump this thing if they want to. So high risk, high reward, up to you. Yeah, watch KC. That's probably the only other Chinese stock I would be saying. I don't know. Wasn't it? Yeah, it was trying to go high today, but then it fell back. Yeah, we'll have to see about these educational Chinese stocks. If they're worth anything, I'll have to watch them more carefully. Otherwise, nothing else. So we're going to talk about crypto mostly today. Yeah, Nova, nothing interesting. Yeah, nothing interesting there. So yeah, we're gonna talk about crypto for a while. After I play another set of videos. So that's about it. Okay, so let's see what's next. Oh, we got some BYD news. Perfect. Some Chinese. That's perfect. And let's do this one first.
Excitement, because not only did you recently have the trading of those options around the spot Bitcoin ETF, but you also have now Gary Gensler with the idea of not only him stepping down, but a new SEC chair, a set of new filings, new types of assets that you could see traded on a spot basis in the ETF world. What are you watching the most?
So one of the biggest themes that a lot of people in the crypto and both ETF community are talking about is just, without Gensler, how many more altcoins are we going to see in ETFs? So we have a spot Bitcoin ETF, we have a spot Ether ETF, we have filings for XRP, Litecoin, and Solana in an ETF. And so although those were filed under a Gensler administration, the talk now is that it's going to be way more likely to be approved if we have someone else helming the SEC. And then the question now is, what else could be put into an ETF? Could we see MakerDAO's coin put into a spot ETF? I've heard that one kind of pitched. And then not only altcoins, but could we see technical analysis applied to a Bitcoin ETF? Actively managed Bitcoin ETFs, ones that combine more derivatives and the spot prices. People are just trying to imagine that Wall Street is just going to really try and commoditize the boom in crypto now.
I guess I wonder if there's actually demand for all of these different products out there. We certainly see that for the spot Bitcoin ETFs, no question. Certainly spot Ether at this point, though less demand than we see for Bitcoin. Is the market just going to say essentially, okay, well, these are the ones that we believe in, not necessarily these other ones?
It's a good question. Also, when we're talking about altcoins, a lot of the kinds of traders, retail traders who want to trade things like an XRP token probably don't need an ETF to do so. But nevertheless, that isn't stopping Wall Street and ETF issuers from trying to squeeze out, any last expense ratio, even though these products only cost 0.5%. It doesn't stop people from talking about all of these filings, but it's a good question. I mean, I did speak to one ETF model portfolio manager. He runs different portfolios. He was saying that he'd probably put a spot Bitcoin ETF into his portfolio, and he'd consider something that had a little bit more active management because he's from TradFi. He doesn't really know how to apply that in his portfolio.
You are certainly making Bitcoin look much more mainstream when you're talking about MakerDAO in the form of an ETF. That is a decentralized, autonomous organization. And one of the first certainly would be interesting. Autonomous organization, one of the first, certainly would be interesting to see that financialized. We'll see what comes.
All right. So I don't know, a lot of more ETFs come in, so it's going to build up more hype for these dumb altcoins. Watch out. And we're going to get into alt season, and I'll discuss that in a bit. But first, let me remind you, SMCI. Okay, so the last several trading days before Thanksgiving, I've been selling bit by bit since it looks like it was weakening, trying to sell it above 36 each day and increasingly. Now I'm going to switch over and go to SMCX for the rest of the next month. Now this is dependent on what I see in the SOX. So SOXX, this thing gotta recover. Can't be goofing off anymore. If I see this thing break down, get out of everything. Okay, in big cap tech anyway. So watch that. So SOXX and SMH, watch those carefully. Looks like software is still holding up most of the QQQ right now, but yeah, things could change. Now, as far as AI is concerned, beautiful sound, SOUN, saying perfect move, bouncing off here and going to the top of that range at around $9. Now it wants to break out or not, I don't know, but yeah, you can take some profit then. Today I was surprised it moved that much on a half day, but hey, this is a half day. Sometimes crazy things happen before we get into December. So every time around the end of the month to the beginning of the month, you'll be doing everything. Hey, what's up, Lolo? Yep. So watch this one. Maybe this will make a new high as we continue into next year. But again, I gotta be convinced that nothing fishy is going on with the NASDAQ 100 because small cap is doing well. Biotech's holding it together, but not convincing yet. Those two need to change. Oh, yeah, and RXRX, beautiful move today. Yeah, it was up, 10.82%. So, yeah, I mean, what can I say? Some of these crappy bottom feeder, high volatile stocks, they're moving well. I gotta continue on. And see where they're gonna go. But if you gotta pull the plug quick, be aware. We're entering the new month, okay, and people are gonna go crazy before the New Year's. Not many trading days left in the year. All right, let's continue on with the videos. Let's see what's the next one. Oh yeah, drugs. So hymns. This will be, maybe they'll mention hymns in this one. I don't know.
Had a lot of news in the GLP-1 space, so to speak, this week, involving names such as Amgen, Eli Lilly, Novo Nordisk. Our next guest remains bullish on Amgen, despite the stock falling yesterday. This was in reaction to mid-stage trial results for its experimental obesity drug. Salveen Richter is Goldman Sachs' lead biotech analyst. She joins us right here at Post 9. She has a buy rating on the stock of Amgen, price target 375. Nice to have you here. You wrote in a report out yesterday, you continue to see a highly differentiated asset, that being this drug, and remain confident in the outlook for it. Why do you differ from at least what was certainly not a decidedly positive reaction from the market?
Sure. I think what happened yesterday was that people, they really couldn't understand the differentiation versus Eli Lilly and Novo Nordisk drugs. But also, they want more details as it relates to the tolerability profile of the drug. The reason we think it's differentiated is, one, you've got efficacy that looks in line with Eli Lilly at about a 20% weight loss out to 1 year, but it looks to be deepening over time. So it looks like you can have more weight loss past 52 weeks. In addition, it's a once a month or less frequent injection, and that differs from the once weekly injection. I think that the key point of debate was around the tolerability profile, the nausea and the vomiting. It seems on vomiting, for instance, they'll be able to go from 40% to 20% of patients, getting closer to where Lilly is with their patients on changes they're going to make to trial design in the phase 3. So, it wasn't just an obesity story. It also looks to be a diabetes story where they showed some differentiation on that side as well, potentially a best-in-class profile.
So you're fairly confident, at least in tolerability, that they will start to show numbers that are roughly in line with the existing therapies?
It might be slightly higher, but it's a first dose effect, and it doesn't seem to be as high when you take the second dose and beyond. So,
who's in the pole position when it comes to building capacity and delivering supply? Does anyone have an advantage on that?
So Lilly and Eli Lilly and Novo Nordisk are clearly, the duopoly right now, and they have the supply. Amgen has the ability to manage supply, just given their infrastructure.
What's the history? I can think of, for example, cholesterol medicines. And, we started with Lipitor, and of course there are so many. But what does that history show us in terms of new entrants into a market that already has existing therapies and where the differentiation and impact would not seem to be too great?
I think with diabetes was a case where there's still a duopoly to a degree that's played out there. But we've seen, cardiovascular disease, for instance, where you've had multiple entrants. I think here, where we think the anti-obesity market will move to is one where people will have a selection for what they want. Not everyone needs to lose more than 20% of their weight. Not everyone wants an injection. They might want an oral. They may want a less frequent injection. There may be a subpopulation of patients that have cardiovascular disease and opt for a drug that looks better in that population. So I think it's going to be broken up in subpopulations based on patient preference.
What about this proposal from the White House that we got yesterday for Medicare and Medicaid to cover anti-obesity drugs like this for obesity and not just diabetes? Do you think there's any reason to expect that to follow through and happen under a Trump administration?
I think we'll have to see what plays out there under the new administration, but clearly there are links from obesity to many other diseases, including cardiovascular disease and a link to mortality. So I think that's probably, the thought process here.
And finally, when do we get to oral medications of this type? And who do you think will be first? I would assume that will conceivably be a market share positive for whomever it is.
Yeah, I think we're watching Novo Nordisk and Eli Lilly to be first here on the oral side, and then we'll start to see other entrants come in over time.
All right, but generally speaking with Amgen, you expect that stock's going to recover the losses from yesterday and respond positively?
It came back to kind of our base business valuation of 285, and so from at this point now it's about numbers for 25, additional details that will be provided, as well as catalysts as we look to the next year.
All right, thanks for joining.
Okay. So that's good. That's good news for HIMS. All right. So I guess that's why it went up. I don't really care about the news, honestly. I don't follow that stuff. So I just need this chart to keep looking good. So hopefully it'll be covered under Medicare, Medicaid, and it'll have more access to this. So HIMSS does the generics version for, I think, either Novo Nordisk or Eli Lilly. I forget which one. Yeah, it's one of those. But anyway, let's go back to the crypto again. Let me put in the stuff here for the altcoins. So altcoin season. You remember this chart right here? So that's altcoin season. This graph, and I said some days ago, if it gets over 50, so it's been passing that all week, consistently moving up. Perfect. That means these altcoins are outperforming Bitcoin at this point. Now, the only key though is Bitcoin. It better stay above 95K. All right, that's the key. You got to have that happen, and at least it goes sideways. No volatility, no funny business here where it just shoots down or something. Okay, so we got to wait for that and see if we can get through December into January. If it can last this long, we have at least 1 month of this. So all you crypto heads, I'm not one of them, but you should be looking at the strongest bad boys here. Okay, last time it didn't last too long. Yeah, let's see, the 2021 era, it lasted about couple months, maybe 3 months at most. Yeah, so that's the problem. Now, see who's the top dog here. You can see it scrolling on the banner. I gotta put my banner up. My bad, I didn't put my banner up. Yeah, I'll put up the banner so you can see it scrolling underneath. When you get to the end there, you'll see these tickers. We've got XLM, SUI, DOGE, OM, HBAR, ALGO, XRP, ADA, PEPE, Pepe, BONK. All right, now those are on the board right here. Those are the top 10, I believe. I think I listed out 10 of them. I think someone was talking about HBAR to me, asking me about that. Yep. Maybe it's time. Maybe it is time. I know XRP has been the strongest recently so far. XLM, yeah, that one has been the best performer. Those, yep. So make note of them. Those are the strongest ones. Now, I think someone mentioned 2 other, like these micro meme coins. I guess maybe they're meme coins. I have no idea, but I think we have to look at whichever one on the top, and then we'll work on from there. Maybe those AI coins might be more interesting in the coming weeks. We'll have to see if they outperform and push themselves up on the leaderboard. But those are the top ones so far. I have no idea about their fundamentals or their tokenomics or anything like that. We'll just have to look at the chart. But XRP so far, it's been looking good. I'll just have to do my homework, go over some of them. But yeah, XRP still right now, I'm looking at it. It's just like, yeah, this bad boy has the strongest chart. So even though XLM, let's see, XLM, yeah, Stellar Lumens, not bad, pretty good, pretty solid chart as well. So I think these two definitely got to look at them. XRP is winning though. XRP is definitely winning so far. So that's Ripple, if you didn't know. So yeah, you can get your Coinbase and go have fun with it. So there. Well, I'll have to go through the charts and give it to you guys. Yeah, I don't myself play these things. So your mileage might vary, but I would say that if altcoin season is starting this week and can continue on, then we're good. But pay attention to big boy Bitcoin. And I think you should also look at the other ones that, that used to be at least popular. I mean, Litecoin and whatever. Some people use like Litecoin as kind of a leading indicator. Like, they won't trade it, but they'll just look at Litecoin. Well, if Litecoin is doing okay, then they'll feel safer about things. So Litecoin, Bitcoin, and Ethereum, of course, and then Ethereum Classic as well, since You know, a lot of people switched over after they went proof of stake on Ethereum. So definitely look at those as your benchmarks to see if things are good. Now, okay, let's continue on. We're going to go to Chinese EVs for this next video here.
With BYD and these potential price cuts, what level are we talking about here? And what does this mean for both the Chinese EV market and the global?
Well, look, even BYD, its advantages in supply chain and battery technology, they're not immune to these price wars. Like they've probably been driving it at certain points. All the companies there are going for market share, and there's sort of a Darwinian play going on in China, where the government does absorb losses or helps a lot of these companies who keep cutting their prices. Help keeps them afloat, but this doesn't go on forever, and the Chinese government knows that over time it's going to winnow down to a few players. Even with that, even with all this government subsidy and support that these companies get, BYD's got to maintain their profit margins. They're one of the few Chinese EV makers that's actually making money, so they're leaning on their suppliers to do it, to get a little bit more firepower to keep dropping prices. We saw Tesla drop prices just about a week ago. They offered a special deal in China for the Model Y. It's a temporary deal, but that's just part of the game over there. Everybody is cutting prices and in many cases losing money to get market share, and that's why the Western auto companies have been leaving, because they don't want to play that game.
David, there's a great function on the Bloomberg that we used a lot during the first Trump administration, ECTR Go, maps global trade. And when the Trump tariffs were announced on, what's it called, Truth Social the other day, I noted that the three countries that he called out, Mexico, Canada, and China, are our biggest trading partners. And that's in total trade. But of course, in your industry, even bigger, right? Not China so much yet, but Canada and Mexico are where a lot of the biggest factories are for General Motors, for Ford, for Stellantis. How is this next administration, this new Trump administration, going to affect the companies that you cover most?
Look, you're talking about 2.3 million cars coming into the U.S. from Mexico last year, and that's a pretty good annualized number, plus a lot of parts that go back and forth across the border, and that doesn't count Canada. So look, there's a ton of trade here. If Trump came good on these threats to levy bigger tariffs, he'd basically be tearing up USMCA, which was his version of NAFTA anyways. You are talking about more inflation in car prices, period. The car companies will try to pass on any increases to consumers, and if they don't, their margins erode. So it's not good for them if all of this comes to pass. And car companies, they can't just find a new source of parts in the U.S. overnight. It takes a couple of years to build plants and reroute supply chains. So look, it would have a massive ripple effect just on the 2.3 million vehicles coming out of Mexico alone. And then you're talking about all the parts flow and so forth. And yeah, it's a huge deal if he's going to really go that big. However, he's made threats like that in the past and not come through on them. So we'll see.
I wonder, David, how this then affects the auto workers. And I know you cover the business of cars, not the politics of Michigan, but a lot of those factory floor workers voted for Donald Trump, pushed him over the edge in that swing state. And if these tariffs drive up the prices of those vehicles, aren't they going to have a harder time making money, keeping jobs?
Now, look, sales go down, workers' jobs are more at risk. And, that is a big threat to those workers. For a long time, though, they've just worried about watching their jobs go overseas. And Trump became their hero, promising to do that. And we do have huge tariffs that keep a lot of cars coming in from China. And, there were some things in USMCA, like mandating 40% of the parts content of a vehicle in order to get the cheaper tariff coming into the U.S. from Mexico. What that basically said was the parts had to come from Canada or the United States. That did probably stop the flow of some jobs from Canada and the U.S. Into Mexico. So there are some things that Trump has delivered for them. I think there are other reasons that union workers have voted for Trump. A lot of them are socially conservative, so they're more in tune with his platform. But he has delivered in some some ways on this, but look, there are a lot of unintended consequences for auto workers if prices go sky high because of tariffs. Absolutely.
Okay, so things are more complicated. We'll have to see how things shake out. Now, one thing we'll have to look at is Mexico. So ETF EWW is Mexico's ETF that you can buy. And yeah, I've been using the MEXX ETF. That's 3X EWW below 10. See how this goes. I did it during the election, so it was like after elections, it dropped, got a quick pop, but that faded quick. And I'm doing it again. Let's see. We got the first news of tariffs for Mexico, so that's out of the way. The bad news is out. Are there any new sellers of Mexican stocks? That's the question. You got Mexican cement. I'll use that as an indicator, a CX. So not very good from earnings. And the election, same thing. But it's trying to hold that $5.50 area. So that's I'm using that as an indicator. I'm not trading this one. Okay. And I'm not saying that like it's a good stock to buy for long term, but it could be. Could be. If a lot of building happens under Trump for at least 2 years, then people are excited, especially if house prices go up. They'll definitely need more cement and CMEX, CX is the symbol, ticker symbol is quite popular. So anyway, let's see what happens. MEXX. The other thing to talk about in relationship to that is bonds. So it's finally breaking up. Good. So if you've been buying TMF at around 45, good for you. TMF is a 3X ETF of TLT, the bond ETF, TLT. So yeah, you'll get your dividend, which is basically your bond coupon payment for TLT after today. If you're holding that, if you're doing TMF, you got to wait till just before New Year's and you'll get something. You'll get your gift then for TMF. So I think we're fine with bonds. We've got all the bad news out for Trump, tariffs and blah, blah, blah. And the bond market is recovering. So nothing scary there anymore. Bad news is out. And the dollar is falling back. Perfect. So these are good things. Good things for the stock market. People, it should be easy going, I think, with the dollar down. So it shouldn't fall below 100, though. But as I said, there's a Goldilocks area for the dollar to keep the stock market happy. Now, let's play some of these videos here. Show you the danger we're at. So doesn't mean things will be rosy for December, but even if they look like it now, let me get that video for you. So one from the Wyckoff guys, and then we can talk about the little crypto video again after we play the rest of the videos.
You've drawn that demand line underneath this, Ramon, and that is my magic threshold. And if it goes below that magic threshold of the demand line and we'll watch for spread and volume, then that would be, I think, gives us the potential to have a short, sharp decline that could maybe take us into the end of the year, because now we have to keep in mind that we have the end of the quarter, end of the year at work here. And I have seen on numerous occasions where, especially end of the year, you have all these institutions and they're all just hanging on to their positions going, please let me get through the end of the year holding these positions. And then you get like a 2018 kind of a scenario where it just goes down and it just starts cascading down because there's a lot of other fast on the trigger institutions that are saying, let's raise cash. So I'm watching that trend line, Ramon. To me, that's just like, that's the key to me is.
Okay. Let's see. Let's go.
So
back here.
I'm watching.
Yeah, so gotta be careful here. So I guess we could go down to back to 5,600 on the S&P. All right, let me see. That's around what? Is that a good 10% or something? Let me see. Let's see if that is. Oh yeah, almost 7 point something percent. It's possible. It's definitely possible, and I'll show you why. So Tom DeMark, let's go back here. Tom DeMark, because I mentioned him to do the. I'm gonna buy his little or his son's little subscription plan here to get these DeMark signals and see if they're really worth it. Because that might be worth it for you guys to see me do some of that stuff because it's really advanced charting. I don't want to scare you guys, so but I'll try it out and see how much improvement I get, how much edge I improve because Tom always likes to copyright everything. So anybody that like tries to reverse engineer his indicators, they get written, they get struck down by him. So a lot of people put it on TradingView and all that. So this is the article. You can go to the link right here. This was November 15th. Okay, it says stock market is nearing a top. Draws 1929 parallels. Stock market has been charging along for months, perhaps not for long. Tom DeMark, an award-winning technical analyst who has advised investors, including Paul Tudor Jones. Oh, okay. You remember Paul Tudor Jones? 2 videos ago, I played a little bit about his documentary predicting the 1987 crash, all right? Leon Cooperman and Stephen A. Cohen says that a top is likely imminent. DeMark focuses on trend exhaustion, and his mantra is that markets tops on good news and bottom on bad news. In particular, he focuses on a string of 9 and 13 daily or weekly moves, which don't have to be consecutive, but do have to be better or worse than 4 sessions ago in the 9 model and 2 sessions ago in the 13 model. I've shown a few of these things. I've shown one video with DeMark doing the 9s, and I showed some ones from Rick Bensignor, if you remember him. Rick Bensignor. Let me put up his name. And you can go to stock charts. Search in stock charts. You go to YouTube too and just search his name. You'll find some. But if you go to stock charts TV channel and you search his name, you'll find you'll find some stuff from him that you can do. I played a video of a little snippet, some stuff, but this is one of the things he likes to use. Yeah. Okay, so we can keep going. And he does this little thing. You can go to the article and look at it yourself. Tom DeMark says optimistic upside potential would be 47,045 for the Dow. I think we were close to there. And then he was looking for this exhaustion at 13. Yeah, I don't know why this image wasn't fully loaded. Okay, weird. So 13 is the count we're looking for. I think we hit it. So I'll show you the next article. So yeah. As for the S&P 500, he says monthly model countdown is at either 12 or 13 and says the comparable upside is about 6,118. We're almost there, right? I think we might have hit it already. Yeah, we're almost there. Almost there. Not there yet. Okay, so on daily charts, the Dow is at countdown 11. S&P is also 11. So basically requiring 2 new all-time highs to trigger a sell. That could lead to a standard 5 to 10% pullback or what he calls a full-fledged breakdown. All right, so if we do have a pullback, what's up, Garen, in December, then I just buy. But yeah, so first 2 weeks, let's see how high we go. Once we hit these highs, be careful, right? That's it. Or maybe we'll just break down right on Monday. I have no idea because funny things happen when you switch months. So that always seems to happen after that, So past 2 weeks rally has been on stills. Some suspension of buying, even without selling pressure, could undercut the rally and transform into a seller's market. Granted, good news could unlikely extend into inauguration, but at any time, once buying interest is interrupted, subsequent rallies should be short-lived. So, we'll see. We'll see. So the next article is updated one. Now, I'll have to give you a caveat. He could just be telling you this stuff on Market Watch just to like sell his services, right? So anyway, technical analysis. DeMark says his models are flagging major caution for the holiday week. Okay, this is updated. Okay, in particular, we got that. In particular, he's focused on string of 9s and 13s. We know that. Back when I started in the investment industry over 50 years ago, it was common to see both domestic and worldwide stock markets record trend changes over long weekends when trading was closed, he says in the email. Yeah, while he said that hasn't been the case in more recent years, he's thinking of that pattern now due to how close his models are to reaching their targets. Although this Thursday is an American holiday and Friday trading the day after Thanksgiving is typically characterized as one of the most reliably low volume up days of the year, the haunting of the long weekend unexpected trend change lurks behind the background, right? What is particularly disconcerting is the fact that some of our most reliable stock market timing tools are about to flash major caution. All right, so Dow Jones almost hitting his target from the previous article. Now he says that the top is nearly there. The Dow Jones Industrial Average on Tuesday did meet his countdown model's requirement for 13 gains, and the high of Tuesday, 44,903, was only 17 points away from its 44,920 upside projection, he says. He says that the S&P 500 index, SPX, may reach the 13-move requirement on Wednesday, and he says that the upside of that index is $6,042.28. We meet that already, so we got those. Now, this is the question. Does that mean we're already here? We're already here. So we'll see on Monday. So watch carefully Monday morning. Okay. If you see some weird crap, get out. Get out. Yeah, he could be. But he was wrong last week. He thought it would go down last week. That's the problem. If you don't have the right timing tools, you ain't gonna get it exactly right. Right? He was 2 weeks ago, I think. He started. I thought it was the crash then. So I was talking about the mark way back when, right? Talking about the 9s. There's no. Oh, you want me to pull up the screenshots again, John Galt, White John Galt? No, I don't need to, because I don't need to go through that again. Because this is you did, bro. That week you said after Nvidia's earnings, S&P should be over here. Nah, bro. You ain't the mark, motherfucker. You ain't the mark. The mark is the man. No, he doesn't follow candlesticks. That's why I told Gary not to do that crap. That's bull crap, like technical analysis. Anyway, yes, T-Spells, what's up? What's up? Anyway, yeah, here we go again. Go to Jungle Justice for your justice, White John Galt. Not here. Anyway, we got 13 count. So, yes, watch out for Monday. We shall see. We shall see. But there's no guarantees, right? There's no guarantees in this business. Anyway, yeah. Okay, I got that. Let's see what else we gotta cover. I just noticed previous one. Yeah. Right. It's called bar charting. Hey, what's up, CKJ3? Yeah, it's called bar charting. So the DeMark stuff, you count the 13 and 9s and 13s, and that's it. Anyway, that's it. All right. Okay. So, yeah, it's almost an hour. This is just a short videos I'm gonna do. I did have something to show you guys. Man, maybe I'll show you this one. This one will be interesting. This guy does some crazy stuff. This guy's the only guy that does all these DeMark things. And oh yeah, there's another dude too. He's a doctor. Let me put up his blog. He used to blog, but then after a while he just privated everything. This dude's a medical doctor, and he just does all these options on the he does all these crazy option analysis, dark pool analysis, and then he uses the DeMark indicators. Oh man, this guy, he was so brilliant. And he did the gamma analysis for all the indices. Yeah, this guy was brilliant guy. But once you have like your edge, you don't want to tell too many people. Like he kind of gives some hints and stuff on Twitter like 2 years ago and things like that. I didn't really understand too much of what he was doing because he's just way too complex. I didn't really think I needed that much edge, but if you're really into competition here, trying to trade things, and you feel like, oh yeah, you got to really find your thing. Here, let me get this. Yeah, he privated everything, man. He privated everything. Hey, let's see. We got this. Yeah, Tom DeMark. This was like in June 2022. Tom DeMark, a review of the bullish move initiated in January 2016 and ending January 2022. So you see this C5. So that's like a C5 wave. This is Elliott wave stuff. I didn't even talk about Elliott wave. And C5 in the 13 right here, 13 count coinciding. That was the top, and this was the bottom. So yeah. And this is the software like you can use, but you got to pay big bucks for it. Like, I don't know. So I'm gonna have to read the book. Honestly, I have the book. I have the PDF. So it's by I'm gonna have to learn this. I don't know if it's worth it. I think I'm gonna do my charting on the. All right. Yep. So yep. Yeah, CKJ3. Let's see. And I'll have to go through all of them again. I mean, not all of them are gonna do anything. Maybe these are just like I'm just trading them. Some of them are shorting them, too, like trading back and forth. I'll have to categorize like, okay, this is long-term investment, or this is swing, or this is just for day trade every day, or something like that. I'll have to figure it out. Yeah, I'm not organized like Portia, so. Anyway, yeah, let me, man, I'm gonna play that video for you guys. But first, I'm gonna have to get the PDF here. Okay, let me find the PDF on my computer. Here, you can see the file path for right here. There it is. See that? So you got chapter 3, TD wave. That's a chapter I haven't gotten to yet. Yeah, I've read a little bit of this, but yeah, you gotta. And even this stuff is probably out of date. A lot of his stuff he keeps updating, and then he won't tell you. So this book is just like, it's good for an introduction of what he does, how he does it, but from there on, you kind of like, you really have to understand what's going on. So it's so esoteric. That's the problem. Like anything that works, nobody's really going to tell you 100%. You're going to have to figure it out yourself most of the way. So The Mark Indicators by Jason Pearl. DeMark wrote his own books, but nobody understands them. So it takes another guy to tell you how it works. So that's how it goes. So yeah, you can go there, get that. Do you have a spreadsheet of what you're looking at? Yeah, I'm gonna have to. No, I don't. I'm so lazy. CKJ3, man. When I trade, I just go like, oh, I see some tickers. Write them down, put them on TradingView, and I'll just go use them for a few days, and then I'll just forget about them in a couple years, and if I see them popping again, then I'll go back to them. Yeah. Candlestick Bible's good one. Yeah, I don't know. I think too many people know the basics like that. It's like, yeah, there's no edge in them. That's why I always like these weird things. Yeah. Oh yeah. It looks like T Spells already is using ICT, even though she doesn't know it. Yeah, but yeah. Let me get the link for that ICT stuff. Yeah, he has a YouTube channel, so you can go over there, and you can just search his name. There's just plenty of people that talk about it. Yeah, so this is the Inner Circle Trader YouTube, and you can just search the name. Oh, T Spells uses the FVG strategy. Yeah, I didn't know that. What's that? Okay, interesting. Lots of interesting things I'm learning here. Yeah, oh yeah, fair value gap. Yeah, that's the ICT uses that too. Yeah. So it's probably the same thing. Yeah, fair value gap. That's how he does it. Yep. Okay. Let me play this video. And you can see how autistic you can get with charting.
Welcome back to Trade Insider with another market update. We are using the DeMark approach by using symbolic, their system, to analyze the markets. And what we can see is the daily time frame in Bitcoin, BTC, USD, and we had this 5-wave impulse up, and then we had an ABC wave correction down, and now we're in another wave 1 up and wave 2 down. So this actually, if you know other waves, we wait for impulsive wave 3 up to trade. And what we see here, we actually have wave 1 and wave 2 to now rally higher with an impulsive wave 3 up to $75,000. This is a daily time frame, and if you are bullish on the market. And I actually think, yeah, you could probably take some longs here with some stop loss below 55K, and I feel like that would be okay. I mean, you wouldn't from a trading perspective, that's okay to do. However, if we look at the 240-minute or 4-hour chart, this is USD and USDT. We like to look at both because sometimes the volume is different on each, so it helps us to kind of make sure that the volume basically. If you look at the volume, you kind of want to look at multiple things just to make sure that we're not completely relying on just one volume and making wrong decisions. We could actually see that here we have the mark wave count of a wave A down, a wave B up, and we could now see another wave C down. That's one other scenario if you on a bearish side. If you look at the 60-minute chart, over here we had a beautiful C5 down, C5 down, wave C5 down. And then we saw the sequential 9, which indicates actually an exhaustion and the market might change direction. And actually what we saw a beautiful impulse, the market rally higher, and then it came back down. And even here on the 1-hour chart, we actually see now a wave 1 up, a wave 2 down. So this also could indicate that we see now a rally higher to $60,000. These up projections are similar to Fibonacci extensions, so they're quite good to use as indicator. This is where we are over, right? So from the monthly perspective, we're still in wave 5, so we have room to go higher. But if you look at the correction over here, look how little that looks, right? I mean, if you look at this correction, boom, look at this correction, boom, and boom, boom. Like this looks like nothing. So we definitely have some room to go lower. And if you look at our waves over here, because this wave 5 also have 5 waves, 1, 2, 3, 4, 5, and we could see here 1, 2, 3, 4, right? And then we actually have wave 5. A Fibonacci extension tells us that this wave, if we go lower, right, we will go higher. So it's kind of interesting. So the lower we go, right, I mean, that's still great time to buy, we think, because this wave 5 will happen. And so, yeah, so in this area, we think it's going to be great buying opportunity. And that's what we are leaning to, or I'm leaning to. I would rather wait for lower prices also from seasonality standpoint. And then, yeah, if you look at it at the 5-hour perspective, right? Wave 1 up, wave 2. Here's our target area. We are.
Okay. Yeah, you get the idea. You can get really autistic about it. But yeah, he was right. It jumped up after that to 75,000. Now, if you need DeMark to tell you that or not, that's my question. You know, how much edge you get from doing this thing? Like, you're spending time and energy analyzing it to that level. Yeah, what's the edge, right? And not only that, it's proprietary indicators that you have to pay money for. So there you go. Okay. Anyway, got 2 more videos to play, but in any case, I'll pay the money, see how it goes, and see if I get any improvement in my trading that is significant enough for me to say, like, yeah, it's worth it. Fine, I'll do it. But yeah, I got lots of other things to experiment with. You got this ICT and all these other things, which I think, yeah, it's really good as well. So you gotta find your groove. You know, you gotta find your methodologies, and then from there you gotta build your system. And the more you do it, the more better. And other thing too is to incorporate the cycle stuff I've been mentioning little bit by little bit, and we can continue on with those as well. Okay, let's talk about my favorite stock, Axon. Axon is cool, man. One of my favorite long-term stocks. Body cameras. Man, you guys watch body camera videos all the time. Why don't you buy the body camera stock? That's like the best stock you can get.
Axon Enterprise, which makes tasers, body cameras, and has made some investments in drones, hitting an all-time high today. The stock has soared since the election as Wall Street expects the company to benefit from a second Trump presidency. It's the fifth best S&P 500 performer this year. Joining me now is Axon CEO and founder Rick Smith. Rick, it's great to have you back on the show. Welcome.
Thanks. Awesome to be here, Morgan.
So a lot to get to, but the first thing I want to get to is the fact that it does seem like, looking to 2025, a new administration coming into the helm, Axon is in a great potential position. You do make body cams, you make tasers, you have this AI-powered software that can help write police reports to then be reviewed. You've been making these investments into drones, so I would call you maybe an emerging defense tech player on that front too. What are you anticipating from a Trump administration? What does that mean for policies when we do think about things like refunding the police and securing the border and more focus on safety?
So we certainly think, some of those additional funds will be helpful for the business. But one thing we've learned long term is if we focus on building long-term value, our business is pretty sustainable regardless of what's happening politically. And as you know, we've grown from the company that just made tasers to now the world leader in body cameras, in-car cameras, extensive use of drones and counter drone. We bought the world leader in counter drone. And so if you think about that as an information network, our ability to apply artificial intelligence on top of all these sensor nodes is just creating incredible opportunities for us to solve important problems. And with that comes a ton of value.
And I do want to get into the AI specific piece of this, but first, drones have been a big talking point this week. You had Elon Musk take to X to show video of drone footage and basically smack talk the F-35, which is made by Lockheed Martin, but sort of speaking to how drone technology is so key to the future. You, as you mentioned, you bought D-Drone, you've partnered with Skydio, which is the biggest manufacturer of drones here in the U.S. How big, whether it's domestically or internationally, how big is that opportunity to stand up and deploy these drone and counter-drone technologies right now?
It's an enormous opportunity. I think counter-drone, given what's happening in Ukraine and what we're seeing in the Middle East, the ability to track drones and to be able to interdict them is going to be key for public safety around the world, not just military, right? We've got to be able to protect our cities and our stadiums. And we acquired D-Drone, the world leader in that space. We also acquired a company called Sky Hero that's one of the leading companies in indoor tactical drones. So we're betting big on drones and robotics to go do the dangerous sort of jobs where it's not safe to send people in.
And as I mentioned, you are something of a stealth AI play, and that is part of what's powered your stock this year. So how are you deploying that? What are you seeing in terms of application possibilities, and how much is that powering the revenue growth that we are seeing at the company?
So body cameras started a few years ago, something that would record a police incident, and you might use it tomorrow or the next day to go back and review what happened. But now our connected cameras are connected all the time. So we have eyes and ears on the chest of every officer connected to the most powerful cloud software available in the world. And we're able to apply artificial intelligence. So basically, we've become the artificial intelligence node on every police officer's chest. And we've started with just our first capability, which is to help them write their police reports. And that alone is cutting about a quarter of their shift from bureaucratic tasks so they can be out doing more police work. And that's just the first of about 10 major AI services we'll launch over the next year.
And so, of course, it is Black Friday. We are talking about retail, state of the consumer, et cetera. What I find particularly interesting as I look at my notes here is the fact that you do see this business opportunity to provide protection and increase safety in the private sector as well among different industries, including retail. Walk me through that.
Yeah, so there's about 800,000 police officers in the United States, and there's over 2 million private security people. And so if you think about every enterprise has got to think about the safety of their patrons, and they need to be able to coordinate with their local police department. And because we've created this network of cloud software and sensors that connects people and police officers to their agency, we can now connect, retailers, casinos, healthcare organizations, anywhere where people are gathering and they want to be safe. We can now help their private security people collaborate and coordinate with police to make sure everybody's safe on big days like Black Friday.
Rick Smith of Axon. Great.
All right. My favorite stock. Yes. Keep making those things. So we got some other stocks. I mentioned the previous stream. Let me put up them on here. VTOL, eVTOL. So electric vertical takeoff and landing vehicles. And these stocks have been ripping, and they still ripping. So let's see what happens on this next month. So we got the first of the month coming in. So let's go through them. All right. One by one. We got Actor Innovation. What is that? Archer Aviation. Yeah. These were one of the stocks I traded way back when. 2023. Yeah, that was a good time. Yeah. 2023 was the last time, I guess. Now it's ripping again. I'm like, oh, shoot, man. Shoot. I don't know if it's because of Trump or because of the earnings, because they happen around the same time. And then you have Joby. Joby is like kind of like been funded by someone. I forgot it was Amazon or somebody, but yeah, Joby, Joby. Yeah, up again today, 11.87%. So Archer was up like what, 18.44%. Yeah, these things are like, crazy ones. These are crazy ones. So high risk stocks. And what's the other one? Blade. I think Blade is a laggard here. Yeah, Blade Air Mobility. Yeah, this one's lagging. They're not it's not ripping as hard as the other one, but it's following the other one. It looks like earnings like reaction wasn't good. Too bad. All right. Speaking of big tech, let's go talk about something with the antitrust thing. So we have Google antitrust news with the Chrome, and then now Microsoft also is having problems.
Google's latest move after losing that antitrust case over search, subpoenaing AI rivals, trying to rebuff the DOJ's efforts to force a Chrome breakoff and more. Our Drew DeBose is going to explain that strategy right now in today's Tech Check. Hey, Dee.
Hey, Carl. So in short, Google wants to convince the court that the emergence of AI-powered search needs to be taken into account, and it has changed the search market as we know it. Google writes that business models in AI, much less winners and losers, have yet to be determined, and competition globally is fierce. So what is Google asking for from its rivals here? Well, a lot. If granted, it would represent an absolute treasure trove, especially from those startup darlings that don't typically make user data or financial performance public, or hand it over to rivals nonetheless. From OpenAI, Google wants usage data for ChatGPT, licensing agreements, even board minutes related to its plans for search distribution and any advertising strategies. From Perplexity, it's looking for active user data, advertiser pitch decks, its monetization strategy, among other information. Now, Google's also asking Microsoft for its agreements with OpenAI and other AI companies, writing, if new artificial intelligence tools and technologies have provided Bing a novel mode of distribution, and all indications are that they have, Google is entitled to present that evidence. Now, OpenAI and Microsoft have agreed to some of those requests. Perplexity lawyers say that they're looking at it. Now, this could open up a new chapter, not just in this case, but in the generative AI race at large, if this is made public, potentially strengthening Google's defense, which is what it wants, but also exposing industry dynamics and potentially leading to more regulatory action. Now, Google's deadline to submit its own proposed remedies in the case is December 20th. The next critical step, though, and the real wild card here, is the incoming administration and how it will handle or reevaluate these remedies. Will the DOJ under Trump be willing to view the search market through this new lens of generative AI, or will they want to quickly resolve this thing with the existing information on hand? This is a key point for Google itself, for the generative AI race at large, guys.
Damn. All right. So they're gonna get evidence from every other competitor too. God damn. So everything's out in the open then. I don't know how that's gonna play out, but yeah, that's weird. That's really weird. Things are getting crazy. All right. So last video here. Antitrust.
No.
So we know that it's essentially the beginning of what it was going to be a long process. The FTC has been kind of building up to this for about a year, interviewing competitors, customers, looking over documents a little bit. But now they've sort of have officially compelled Microsoft to produce what will end up being like a tremendous amount of material, documents, interviews, the whole bit. And it could be the beginning of a lengthy process.
And already at a time when we've seen other moves against Google as well. But if we get this new administration, Trump 2.0, where he's talked about more deregulation, about government efficiency and so forth, what sort of changes could we see in this approach?
So that's a good question. It's a little bit hard to know. I mean, if it's not terribly difficult for a new administration to want to sort of slow this down, if they wanted to take a different sort of tack. But the first Trump administration was pretty aggressive against tech companies. The Trump DOJ sued Google, the Trump FTC sued Facebook, or now Meta, and this would be just the next major tech company to face one of these sort of massive investigations, and I wouldn't expect this to be just automatically slowed down. I think there's a good chance it could move forward.
So that's sort of regardless of it's Mina Khan or not, right? You mentioned that this is the beginning of a lengthy process. Do we know what the sort of process is going to look like and how drawn out these things tend to be?
Yeah, I mean, these investigations can take several years. I think Google and Facebook and Apple and Amazon were all investigated for at least 2 to 3 years before lawsuits were filed. And I mean, if I would expect that to sort of hold here as well. And then at that point, if the government decides, it has enough evidence to bring a case, it'll file a sort of a major monopolization case against Microsoft. But before that, they're going to talk to every one of Microsoft's competitors, as many customers as they can. They're going to look through sort of what will probably be petabytes of data. It's just going to be a very long, sort of cumbersome process.
Well, I don't know. Everything is too slow, man. Any of this new stuff, I don't know how long it'll take to figure out. But in any case, yeah. Well, how much does it affect? What's up, Jewel? Yeah, okay. Space Force and NSA is already on this. Yeah, I don't know, Jewel. I don't know how much is on whatever. I think this is just like, this is just games, political stuff. And Trump is probably, well, it's up to him and his administration how hard he wants to pursue things. They might amend things, because I don't think he's a fan of Google and whatever, but yes, it's not has nothing to do with like technology. It's just to like, if a company gets too powerful, you beat them down. Like if you can look at China as a more extreme example, when Alibaba got too big, they just whooped on them really hard. They broke up their little company into little pieces. Jack Ma ran away into like hiding and stuff. So yeah, I mean, it's just a power play, right? If someone gets too powerful, that's just about it. Yeah, these tech companies are quite powerful. They're basically utilities at this point. And if you remember the history of AT&T, they got broken up into little baby bells. I mean, AT&T used to own like Bell Labs and all that. Bell Labs got sold to Nokia. I mean, my friend worked in Bell Labs and became, what is it? Lucent Alcatel or whatever. That's a French company, and then it got bought out by Nokia. So Nokia bought them out or something like that. Blah blah blah. But yeah, all these little companies, they just got beaten down and get wiped out eventually. So that's a problem nowadays, because if you break them up too badly, you lose competition in terms of in tech and all this AI stuff, because having a large company is beneficial to integrate everything. But yeah, there are drawbacks to having them too powerful as well. So there's a balance to how you want to do it. Yeah. And in the end, AT&T re-merged everything anyway. I mean, AT&T came back, right? Like they just absorbed all their little baby bells again anyway. You used to have like SBC down in Texas, and then they bought Pacific Bell. So then California and Texas had SBC, and there was like Pacific Bell Wireless. They got bought out too. And then eventually it all just became AT&T again, So my parents had like multiple like companies, they kept the same phone line, but it was just like, they had the landline, it became the wireless line, blah, blah, blah. It's the same company. in the end anyway. But it just kept getting bought out by another guy. And this is what I hate too, because like there's very little competition for cell service in America. You only got like this, like you got Verizon, like what Sprint got taken out too, then T-Mobile. So it's just Verizon, T-Mobile, AT&T. They can just sit on their butts and overcharge you. There's not much really competition between each of them, and it's really terrible. If you go to other countries, they have tons of competition. Like you go like somewhere like Egypt, there's like 10 phone companies. They're all competing with each other. Everything's like low cost. Now, you could question like, oh, well, is the service good? Well, I mean, I don't know. For the price you pay, I guess this is what you get. But you get overcharged here. Kind of service you get. You can't even beat like Japan, South Korea, Taiwan, China. Like you go over those countries, it's like amazing. You could do IRL streaming like crazy, but then if you do IRL streaming, you probably get arrested like Johnny Somali, right? But his signal comes out clear. There's good service everywhere. You probably get full bars like in 99% of the places you go in, like those East Asian countries, unless you go like really off in the boonies. And even then it's probably still okay. Probably equivalent to like US, like the worst of US service. Yeah, anyway. DARPA taxpayers, yeah, that's right. DARPA, everything's run by DARPA. A lot of DARPA funding, NSA funding, into DARPA funding. Yeah, a lot of the stuff came from military. So, and well, we can talk about utility stuff too. Utilities is also another thing that, should be private or should be public. That's a good question. And if you look at California, like there is a public utility where it's not owned by shareholders. It's around Sacramento area. It's called SMUD. You can look them up. SMUD, the Sacramento like municipal utility district. They aren't really affected by all the issues with PG&E in Northern California. And PG&E actually fought them quite hard to take over a lot of their like jurisdiction. I guess they like if SMUD went into like some place, wanted to extend into another place, SMUD would just be like getting fought by PG&E. I actually have PG&E stock. It's just like, it's just a monopoly. So PG&E is a monopoly. Like, of course the stock will go up, and they overcharge you like crazy if you're on PG&E. But if you're in Sacramento, you have the option to go on SMUD. It's way cheaper. So public utilities can work. I think San Diego County is trying to do that. So I don't know. You can talk to Tough Guy, see if he knows anything about it. I doubt it. But but let's just put it this way. Like, sometimes putting the power back to the people, it sounds communist or whatever. But sometimes it does work out for the best. I don't know. Everything's a Swiss Army knife. Maybe some things are better public. Maybe some things are better private. I don't know. I'm just not like well versed on the politics and the economics of running a utility, so I can't tell you that. But if you look at Enron, that's another thing that went like that was way bad, right? Enron and all their little schemes and stuff. So let's just say that maybe nothing is inherently evil. It's just that people are corruptible, and if you don't put balances and checks on them, anything could just be bad. Like anything could theoretically be good, right? Okay. Oh, let me see. I went through all the videos. Did I miss anything? What other things I got to talk about? Oh, let me look at natural gas. Let me see natural gas again. Yeah, there shouldn't be a private hedge fund. I don't know. Everything's just so messed up now. It's like octopus, like tentacles everywhere. Oh, Johnny just got beat up by Korean special forces. Oh, great. I mean, this is whole dramatic stuff. I don't got time for this shit. Oh, the follies of IRL streaming, right? Yeah. Get your ass kicked by that. Yeah, let's see. Let's look at natural gas. So I was shorting it twice. I shorted it here. from Thursday to Friday in November 21st to November 22nd. I did it again Tuesday 26th to Wednesday 27th. Now I recovered. What does that mean? I don't know. Do I short it again next week? I'll tell you guys when I feel like it. And if you want to short it, you use cold, all right? It's too hard to go long right now. Go back to boil. I just can't do boil anymore here. So boil, BOIL is the long, because I can't trade overnight. I mean, if I learn like natural gas futures, but natural gas futures is crazy. So that's why I said like use Robinhood. They'll do overnight trading. Oh, that reminds me. Talk about overnight trading. I should. Yeah, nat gas is cheap. It's still pretty cheap, but the time to go long is not in winter. Wait for February. I showed a chart with the cycles on the previous stream, so you can watch that one. I think I did another update on the previous stream, but let me do the dang blah blah blah. Okay, back here. Go back to this thing here, and I was going to show the overnight thing. So in interactive brokers, you can do overnight too. So that's one. So HB, I think someone was asking, okay, Juan was saying, why bother with Robinhood? And there's a reason why. I told you either get two brokers at least minimum. Fidelity is one, right? And Robinhood's the other. The other one will be Schwab, or get Robinhood. Now, the other one you could get is Interactive Brokers, because Interactive Brokers allows 10,000 plus stocks and ETFs to trade overnight, 24 hours, okay? Except for the weekend, of course. Robinhood only does 1,000 plus. Maybe Robinhood has a lot more now. They keep adding it. They keep changing. Now, Schwab and E-Trade down at 20s, right? Very weak. But in around Halloween, Schwab was saying, and Schwab owns, like, they bought out TD Ameritrade, so they own Thinkorswim. Here, look at what they said. Schwab to significantly expand its 24-hour trading capabilities to include the stocks in the S&P 500, NASDAQ 100, and hundreds of additional ETFs, exchange traded funds. So they are starting to try to compete, okay, with Robinhood and Interactive Brokers. But again, if you want an alternative to Robinhood, if you really hate Robinhood, fine, use Interactive Brokers. You can have your overnight trading, and they should be able to trade boil and cold and all that. So you don't need to learn futures, okay? Because natural gas futures is not something you should try as a beginner trader for futures. Like, I look at the chart, it's a schizophrenic, crazy, because like one of the problems is that you have weather reports every day, and not just once every day. It's like several times a day. You got 4 of them from the US, 2 of them from Europeans. So you got like a whole bunch of supercomputers running, updating weather models. And if they shift and change, like natural gas will just flip up and down like crazy. It's like having earnings reports every 3-4 hours. So unless you're just like trading it really quickly, like, oh, I can scalp here, scalp there, like good for you. But like as holding it, no. Like if you're holding natural gas futures for long, you gotta construct like, oh, I buy futures contracts for maybe 3 months out, and then I'll do one for 10 months out, and then you try to like figure. Nah, I'm not doing that shit, man. That's crazy. I don't know how you do that. I'm not sophisticated enough to understand all the intricacies there. It's like trying to construct like an options trade, but like way more. I don't think you can predict the weather. So if you can do that, yeah, good for you. But I'm not gonna do that. I'm not gonna predict the weather. So there you go. All right, that's good. I covered that. That's something I wanted to cover actually, eventually. Man, we're gonna have to go back to the DeMark stuff some other time, okay? And then Gary also asked about the point and figure. I'll go over that again in a lesson. I think we got to do one real lesson with that. I'll try to find some old videos, clip them out with Bruce Frazier, talk about point and figure to do the projection. That's why I projected what Tesla would be 600, 700 to like 1400, something like that. I said that. Yeah, Tesla. Yeah. If Tesla could pump that's where it's going to pump to. But hold off, okay? Let's see what December is. We can go back to revisit these longer term projections later for some of the stocks that I think are better long term. For now, hold tight. Don't marry yourself to a stock yet in December. I want to see what happens next week, because if things go south, we'll find out very soon. If they don't, then okay, we're cool, we're chill. Wait for January then. All right. So don't get comfortable next month. Just don't get comfortable. Just because we're almost at New Year's, don't get comfortable. All right, guys. Yeah, that's good for now. But you see, there's a lot of opportunities, right? You see, stocks are popping. I like that. You got the small caps, the big caps. We'll see what's going on. And also the altcoins for the crypto guys. You see the altcoin list. They're scrolling there. XLM, SUI, Doge, DOGE, Algo, AOGO, HBAR, HBAR, XRP, Ripple, ADA, Bonk, BONK, and Pepe, PEPE. I have no idea what that is. Is that Pepe the Frog? Somehow that's on my top 10 list of altcoins right now. Okay, so let me get the website for the altcoin stuff. Altcoin season is here. Yeah, maybe. Just don't crash Bitcoin on Monday. Just don't crash. All right, put that website up. You can go over there and check out the chart there. Pepe, yeah, Pepe, yes, Jewel, Pepe the Frog. Dude, don't look at me. I have no idea if it's useful. It's a useful coin or anything. Yeah, it's a frog. I think people are just buying it because of the meme. Man, if we had a John Galt coin, we could figure this out. Man, we could get hey, let's look at the market cap of Pepe. I think the Pepe coin is, what is this? Coin market. No, I don't want. Oh my God, give me Pepe. Where's Pepe, man? Pepe? What's Pepe at? Bonk. Pepe is oh shit, $8.6 billion market cap right now. So there's $8.6 billion on Pepe. All right, we got you. I don't know what it does. What is this? Let's see what it does. Can I explain to me what a Pepe does? Oh man, they don't have a description on this guy. Come on. What is Pepe, dude? What is this? Bonk. I'll get Bonk and Pepe. Who cares? Who gives a crap? I mean, like I said, Ripple, RXP, and XLM is Stellaris is the top 2 charts right now. But as far as Pepe, I don't know what that's just a meme, right? And Bonk, same thing. Bonk is just that Shibu Inu dog or whatever with something hitting it or something. Crypto. So dumb. Okay. Yeah. So it's Pepe is a frog theme meme asset built on top of altcoin Ethereum. What in the world? Come on. Is this just a repackaged Ethereum? Jesus Christ. Whatever. This is ridiculous. Yeah, we should just do a John Galt coin. I knew we should have just did one. John's not. John needs to be more serious about this shit. Nickel, yeah, nickel. Yeah, we should just we should John Gold. I don't know what the ticker symbol should be. Nickel. Maybe that'll just confuse people. Anyway, all right, guys. Yeah, good night. Yeah, I gotta go make a phone call. This is terrible. Oh, let me play the ad. Yeah, I love this ad. I love this ad.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
Alrighty, see ya.